Yeah, so dear students, let us start with revision of Accounting Standard 5. Really easy accounting standard, because I hope you remember this Accounting Standard 5 is with respect to disclosure in profit and loss. Of course, the name of the standard is not disclosure in P&L, net profit or loss for a period, prior period item, changes in accounting policies. So, what are the things which are to be disclosed on the face of profit and loss? This is what the standard talks about, that these items are to be disclosed on the face of profit and loss. Very fast I will revise small areas. The first area, that's ordinary activities, net profit or loss from ordinary activities, nothing but all those activities which are carried out in normal course of business operations are nothing but ordinary activities. But looking at the size, incidence and nature, if you feel that even though it is ordinary activity, but I would like to disclose it separately, then we say yes, please disclose it separately. Within ordinary activity, any item of incomes or expense, by its size, the incidence or nature, a separate disclosure would enhance the utility of financial statements. Then we have to disclose it separately. The third is nothing but extraordinary activity. Do you remember, my dear students, what is extraordinary activities? Nothing but extraordinary activities refers to items of incomes and expenses which are clearly distinct from ordinary course of business and hence not likely to recur, like loss by fire, government grant getting refunded. See, these are not those activities which you do in ordinary course, na? They are not at all related directly or indirectly to my main activity. When you say ordinary activity, my friends, they are those activities, whether done frequently or whether done infrequently, but they have linkage with my main business activity. That is our ordinary activity. Thereafterwards, the next point which you should remember is prior period item. Yes, it's a revision lecture, so I am not writing down the whole notes and everything. I am just revising those things which you would have studied while doing accounting standards. What are prior period items? Prior period items are items of incomes and expense which arise in current year on account of errors or omissions made in preparation of financial statements in one of the previous period. So, you have made an error in previous year, not necessarily immediately preceding year, any previous year. Current year is 2021, I would have made error in 17-18 and I identify the error now. So, obviously, I will rectify that error. And that rectification of error is referred as prior period item. This is to be again disclosed separately on the face of P&L. But remember one point which you might make an error. Retrospective changes are not prior period items. Like I increase the salary of my staff applicable from 1st April 2016. So, today I am on 1st April 21. I increase the salary of my staff from 1st April 16. Nothing but retrospective changes are not prior period item. They are to be disclosed separately, prior period items. Changes in accounting policies, friends. When can you change the accounting policy? See, my dear, you can change the accounting policy in case of 3 conditions. Which are those 3 conditions? Change in the law to comply with the requirement of an accounting standard, or the change will lead to better presentation and preparation of financial statements. Then I can change my accounting policy. This is given in AS5. When can you change the accounting policy? But if you change the accounting policy, my dear, then you have to disclose. This is given in AS1. That you have to disclose and quantify it, that we have changed the accounting policy and this is the result of the change. Moving to the next and very important, change in accounting estimate. Change in accounting estimate. An estimate, what is an estimate? Approximation. Because we don't have proper means of measurement, scrap value of the asset, useful life of the asset, provision for debtors. These are all examples of estimates. In absence of proper means of measurement, we use estimates to come upon an opinion. Can this estimate be revised? Yes, why not? When can you revise this estimate? Remember this point, friends? When can revision happen? Sir, revision may be due to new information. I got new information. Now, on basis of experience, I am able to understand what should be the scrap value, what should be the RDD, subsequent development. These are the reason I am getting some new info, because of which I have to change my scrap value. Out of experience, I come to know now that the asset cannot be used beyond this much period. This is nothing but a better experience. And the last, subsequent development. Some new development would have happened. And because of this new development, my dear, I have to change my estimate. The most important, a change in accounting estimate is neither prior period item nor extraordinary item. If the accounting estimate pertains to ordinary activity, the change is classified under ordinary activity. If accounting estimates pertains to extraordinary activity, the change is classified under extraordinary activity. Yeah, same thing, one more point I would like to add with respect to change in accounting policies, my dear, and this is where your standard ends. See, I would be doing questions which we didn't do in the class. Class 4 questions we have already done in the class, the recording is already available, but homework section, past paper section, some selected questions which might have given you some kind of doubt. Let me discuss those questions. But yes, before that, just to add one point, change in accounting policy. Following is not considered as change in accounting policy if adoption of new policies on account of the nature of transactions which differs in substance what happened in the past year. In the last year, whatever was the substance of that transaction, this year the substance of the transaction has changed a lot. So, I obviously revise my policy, change my policy. This is not a change in accounting policy, adoption of a new policy it should be. Same way, in past this type of transaction was never happening. This type of event was never happened. I am facing this type of transaction for the first time. So, obviously, I will frame a policy for it. This will be regarded as new policy. It is not change in accounting policy. Adoption of a new policy for events and transactions which did not happen in past is not considered as change in accounting policy. Yes, friends, this is the nutshell of your AS5, very small standard, of course theoretical, but it is a small standard. You can come to our text. Some examples, these are with respect to ordinary, this is with respect to extraordinary, and some examples of it. Then change in accounting estimate. When can you change an estimate? Of course, sir, I get new information, more experience, subsequent development. A revision in estimate, as I spoke, is not a prior period item nor a extraordinary item. Change in accounting policy because of these three reasons. What is prior period items? Nothing but you have made some errors in the previous year, omissions in the previous year. Now what you are doing? Sir, I am rectifying it. This should not be considered as prior period item. Okay, friends, so this is the theory part. This question number 1, 2, 3, 4, 5, 6 we have already done in the class. So, no need to do those questions which have already been done. I will do some selected question. Question number 2. Explain whether the following will constitute a change in accounting policy or not as per AS5. The first thing it says, introduction of a formal retirement gratuity scheme by an employer in place of ad hoc gratia payments to employees on retirement. My answer is no, sir. This is not a change in accounting policy. Now, what is this? Of course, let me read the question and then we go for learning the stuff. Management decided to pay pension to those employees who have retired after completing 5 years of service in the organization. Such employees will get pension of rupees 20,000 per month. Earlier, there was no such scheme of pension in the organization. Again, this is not a change in accounting policy. My dear students, if you remember, what is a change in accounting policy? Nothing but accounting principles and methods used to apply those principles. These two things coming together is referred as accounting policy. Specific accounting principles and methods used to apply those principles. Are you changing those principles? No, sir. But here what is happening, sir? I am adopting a new policy. What does our AS5 say? AS5 says adoption of a new policy for a transaction or event which in substance differs from the transaction or transaction or event which was happening in past. Or an adoption of a new accounting policy for events and transactions which never used to happen in past. If you are adopting a new policy for such transaction or event which differs in substance for what it was happening in past or for event and transaction which was not occurring in past, will not be considered as change in accounting policy. Yeah. So, of course, in both the cases, my dear students, this is not a change in accounting policy. As per AS5, net profit or loss for a period, prior period item and changes in accounting policy, the adoption of an accounting policy for events or transactions that differ in substance from previously occurring events or transactions will not be considered as change in accounting policy. Accordingly, introduction of a formal retirement gratuity scheme by an employer in place of ad hoc ex gratia payment. Now, some of you might be having doubt, what is this ad hoc ex gratia payment? Nothing but a consolidated amount. My employee retires, so I pay gratuity to them. Yeah, I am paying gratuity to my employee. How much? Give it. Ad hoc amount. But now from that ad hoc amount, I am going for a formalized way. Okay, no, if you have completed 4 years of services, no gratuity. You complete 5 years, you will be getting this much. 6 years, you will get. This is known as formal plan. So now I am adopting such type of plan. This is not change in accounting policy. Okay. Similarly, an adoption of a new policy for events and transactions which did not occur previously or what were immaterial will not be treated as change in accounting policy. Both of them are not change in accounting policy. Friends, see, classwork questions we have already done in the class, so we will not focus more on those part in revision. Yeah, I come to past paper question. In that, I would like to do question number 2, which obviously is part of AS1, but again gets related to AS5. HIL Limited was making provisions for non-moving stocks based on number of issues having occurred for last 12 months up to 31st March 17. The company now wants to make provision based on technical evaluation during the year ending on 31st March 18. Total value of stock is 120 lakhs. Provision based on technical evaluation 3 lakhs, provision based on 12 months issue 4 lakh. You are requested to discuss the following in light of accounting standard 1, of course, as read with AS5. Does this amount to change in accounting policy? My first answer is no. Second answer is yes. Can a company change the method of accounting? Yes, why not? Now see friends, why it is coming under AS1 as well as AS5? Under AS1 because you have to disclose if it is a change in accounting policy, and under AS5 because it is nothing but change in accounting estimate. Friends, I have non-moving stocks. Means those goods which I am not able to sell very fast. So obviously at some point of time they will become redundant and they have to be scrap off. So I am creating provision for those non-moving stocks. Now earlier I used to create provision based on number of issues, how many goods were sold. Based on that I used to make a provision. But from current year I am making a provision based on some technical details, characteristics of the stock, which stock, these, that, all those. Now, is this accounting policy change? Answer is no. You will say, why sir? Friends, I should create a provision. This is my policy, that there are certain non-moving stocks, and for those non-moving stocks, I should create a provision. This is my policy. How to find out the amount of provision is just a technique. What is happening in this question, friends? I am changing the technique of finding out the amount of provision. Earlier it was based on number of issues. Now it is based on technical estimates. So this is not a change in accounting policy. Yeah. Can you change the method? Yes, why not? An adoption of method, if it gives us more prudent estimates, then we have to change the method. Nothing wrong. The method can be changed. The decision of making provisions for non-moving inventories on the basis of technical evaluation does not amount to change in accounting policy. Accounting policy of a company may require that provision for non-moving inventory should be made, but the basis for making provision will not constitute to accounting policy. The method of estimating of provision may be changed in case more prudent estimate can be made. Of course, the solution is already there. You can just have a one reading. Am I supposed to disclose that I have changed? Answer is no. You will say here it is written. Here what is written? Read it properly. The disclosure can be made. Should be made? Not. Can be made. If you want, you can disclose. It's not requirement. Okay, friends. So, question number 2 of past paper. The same question number 3 is already done by us in classwork section, that there is arrears of wages, which is not a prior period item. Let us do question number 5. The accountant of Mobile Limited has sought your opinion with relevant reasons whether the following transactions will be treated as change in accounting policy or not for the year ending on 31st March 17. Please advise him what the following situation in accordance with provisions of relevant accounting standards. We will go discussing one by one each of them, my dear students. Provision for doubtful debts was created at 2% till 31st March. From the financial year 16-17, the rate of provision has been changed to 3%. Sir, this is not a change in accounting policy, this is change in accounting estimate. I can revise my estimate. When can I revise my estimate? Sir, based on new information, better experience and subsequent development, you can revise your estimate. Now again, during the year ended on 31st March 2017, the management has introduced a formal gratuity scheme in place of ad hoc ex gratia payment. Don't you think we have already completed this area? This can never be changed in accounting policy. An adoption of a new policy for events and transactions which differ in substance from what was happening in the previous year is not a change in accounting policy. Till the previous year, furniture was depreciated on straight line basis. Over a period of 5 years, from the current year, the useful life of furniture has been changed to 3 years. Obviously, this is nothing but change in estimates. Useful life is changing. Management decide to pay pension to those employees who have retired after completing 5 years of service in the organization. Such employees will get pension of 20,000 per month. Earlier, there was no such scheme of pension in the organization. Of course, sir, this is not a change in accounting policy. Why? An adoption of a new policy for event or transaction which occurred in the past. Did not occur in the past, to be precise. An adoption of a new accounting policy for event or transaction which did not occur in the past should not be considered as change in accounting policy. Lasta. During the year ended on 31st March 17, there was a change in the cost formulae in measuring the cost of inventories. There is a change in cost formulae. What should we do? Yes, sir, this is change in accounting policy. Cost formulae. Instead of first in, first out, now I am going for weighted average method. That is cost formula. Don't say method. How cost will be charged to my P&L, that has changed. The principle has changed there. Yeah. So, you may just have a stuff of glancing through all those things. Rest everything is not a change in accounting policy. Okay, friends. Yeah, this I'll move on to a new chapter then. These are some basic stuff. That's why I'm not discussing all the questions. I'm discussing some of the questions so that quick revision can be done. So, my dear students, let me end up with accounting standard 5 and start with another accounting standard. Thank you very much.